All right, last thing we're gonna do here today, guys, before we get promotions and last thoughts, is Frank always brings a couple really, really good charts to our show on Friday. And Frank, you're a technical king. You and Matt, I love hearing you guys geek out about charts and technical patterns as they're developing. This is a fun one we've been doing for a long time. What do you got for us today?
Ooh, well, I am going to start out with one of your favorites, Tim. And no, it's not one of your favorites. I lied. It's the wrong C. SEE, sealed air. I just saw C, and I know Tim likes C.
Oh, hey, listen, I
I
like good
yeah,
patterns.
if it was SE, like yeah.
I know, but maybe I can get Tim on to add an E to it, and he'll be all right with that as well. Big run up, as you can see here, flagging into the nine, showing a little bit of upward movement here today, coming out of that top or that little intraday downward trend. Tim, could I sign you up for getting into these guys? Let's just make it easy and say above today's high on Monday morning.
Zoom it back a little bit here, Matt. A couple things my eyes grabbed initially when we looked at the chart. Obviously, we got the overall long-term trend. This last earnings report, we were already developing with a couple higher pivot highs, but even earnings, I mean, we came in, blasted out, volume picked up like it always does on earnings on a no sell day, which is obviously something that's going to be very impressive for the bulls. This is now that patient consolidation that's developing after the earnings. So in general, check on the pattern, trend, and momentum analysis here, Frank. In terms of trigger on this one, as I'm looking at some of the detail there, let me pull it up on my chart for a second. I'm going to go down to an intraday. Today's high, that 58 level still is grabbing my attention. So I'm going to have to map that out. That was not overnight data. That was at the open on Monday 2 weeks ago. Okay. So we did hit 58. Could I trigger at 57 and ignore the 58? That would be the discussion, but I would be I'm interested in trend, pattern, momentum, the pay range expanding, all of those kind of things. I think it just comes down to the trigger, whether 57 or 58. I don't know if I would make that decision today. I would probably have to think through it and map it out a little bit more, but I
Sure,
like it.
that's fair. So basically, it's the debate between above today's high and above that pivot from like the 17th or whatever. Is that right?
Correct.
Yeah, I think that's fair. And that was probably unfair because everybody's entry, people are really specific on their entry methods, and they should be. So I'm glad that you are. What about you, Maddie? Can I sign you up for playing this little flag based pattern here on C?
Yeah, very simple answer, yes, but it really depends on how you personally like to trigger on retracements, flags, bases, right?
Mm-hmm.
And that might change on who you are as a
For
trader.
sure.
For
Yeah.
example, like for me, I love ascending triangles, but I literally just want to every time I see a symmetrical triangle, I want to run away. Like I just don't like those types of patterns. And the reason I don't like symmetrical triangles are quite frankly a little bit of the same reason I don't like triggering aggressively on flags. On flags, unlike standard bullish retracements, which have more of a tendency to come down in this type of price range, where it comes a little bit more of a 45-degree angle down coming into the 20-period moving average, that bullish retracement establishes you come down quick enough where you don't have a lot of intraday noise to fight back up against. And again, I'm not saying like this confirmation day against that flag isn't tradable. It 100% is. It's just when I look at this on an intraday perspective, we're so tight up against a lot of this chop. I just like to clear out of this chop a little bit before you start getting aggressive on the trigger. And so what I like here is two things. Number one, for the aggressive trader that loves these types of triangle flag-based patterns, when you violate a very consistent type trend, look at the consistency of that pattern. That violates here today. That's a good tradable signal, no doubt about that. But not only that, I also like the fact that when you violated that trend line, as you can see here, look at the price action on the intraday analysis. Really positive price action on the intraday. You break out of that trend line with the price response today. You establish a higher level of resistance on the intraday. You're coming back down. You establish that new support level. You got to like the intraday analysis on the breakout so you can confirm, and confirm would be right above the high of today, Frank, for me anyways, right above the high. So typically I don't love flag-based patterns. They remind me a little bit of symmetricals with the chop to the left. This one's getting into the point though where the intraday analysis coupled that with the daily analysis leads to a really decent breakout right above 56.90. And so that kind of coincides with the high of today a little bit here today. You see all that chop from last week right there. I like that trigger here. I like it above 56.90.
Nice. Yeah.
Love the analysis here, guys.
Yeah, very, very nice.
Yeah,
Very nice. And I am with you, and I'm kind of your school of thought on entry on on momentum based patterns. I like aggressive entries. On
Yep.
continuation type of patterns, I like conservative entries. But that again is really more of a personal preference.
In general, that's me as
who's
well.
right and who's wrong, right?
Oh,
So-
symmetricals and flags can fly.
Mhm.
I mean, think about it. You got to shift in analysis here. They can absolutely just fly. Symmetrical triangles put a lot of pressure on a breakout either way, and so it's not that they're not great patterns. They're great patterns. It's just every trader has their patterns they love and their patterns they don't.
Well, and those are the type of patterns too that there's a lot of different. How do you get into it? Right, breakouts. It's all I like 10% of an ATR. Well, I like a close. Well, I like 40% of an ATR. There's a little more
symmetrical triangles are like, hey, let's just buy a call and a put and see which one works.
Well, I don't think we should do that.
Yeah. Well, I'm just saying with the symmetrical, you get volatility both ways, right?
Yeah.
And so a lot of times a straddle makes a little bit of sense in a symmetrical triangle because you could see explosive volatility as you break the pattern.
Just have to figure out which way it wants to go, right?
Yeah, that's why I don't love them. Other patterns, I think, are a little simpler.
Yeah, that's fair. That's fair. All right, let's look at a couple more here. I know we're starting to get up against the clock. Let's look at CARG Guru, CARG.
CARG. CARG.
Really like
wait,
it.
What just?
He
can't
used
just
that as an
bypass the
opportunity.
pirate voice.
Listen, you don't get a lot of opportunities
Why did CARG
to be a pirate.
make you want to go a pirate?
Because ARG.
Yeah. Now, when you're like the pirate from Dodgeball, though, right? Like that's the guy. Okay. We're not talking like Pirates of the Caribbean here. We're talking Dodgeball.
Yeah, that's right. That's right.
Dodgeball pirate. All right.
I'm going to veto because of CARG. Like I'm vetoing because of that. Like moving on.
See, I see what you did, Tim. He didn't like it. He's like, how can I not hurt Frank's feelings but get this veto?
He knew what was going to happen. He knew I couldn't bypass the pirate voice.
I like the pirate voice, Tim.
Good, actually.
We're
in that area Friday afternoon, though.
It's Friday fun day.
Where Tim can get away. The first half of the day, I'm always on Tim. The second half of the day, I'm like, Tim, you can do whatever you want, and I support it.
That's right. That's right.
What I like about CARG Gurus here is a couple things, though. I mean, we had this big reversal turnaround on an earnings, right? So that's where we first broke back above the 200. We've got that opportunity to cook, right? We've really consolidated. These were on my breakout list going into this week. These are definitely one that are going to be on my breakout list going into next week as well. I like that it's cooked. With a CARG Guru, we're not looking at like an AMAT where we're flying at all-time highs. So we're going to have a lot of historical chop along the way, but I don't really see anything that really scares me until 34, 35, until we start to get into that old failed breakout range in the mid 34s. I like this to continue. This is a good step. We've now got a higher high. Breaking out would give us that high, or that we have a higher low. I'm sorry. Breaking out would give us another higher high. Just a continuation into that 34 range. Nothing too crazy here on CARG Gurus. Am I wrong?
I don't think you're wrong. I mean, short-term trading is always eye of the beholder when you have a lot of setups, and there are a lot of setups this week.
There's always a lot of setups, unless it's earnings.
Well, there are always a lot of setups, but some weeks have better setups, and I do think you have a little bit of that this week. You got a lot of breakouts to consider here this week, and that's why the scout report meeting I think is going to be so important here today. is, filtering through the ones that look really, really, really good with traditional reversal analysis versus, the ones that are just following the market, right? And I do think you got to respect Car Guru right now, given the fact that in the short term, you've seen a lot of volatility in the market, and ever since earnings from a couple weeks ago, this has been fairly consistent. A little bit of choppy wick action, but that gets solidified very easy above 29. And so for me, I do think this is pretty simple here. If Car Guru is kind of your thing you're looking at coming into next week, I don't know if he'll make the report or not. There's a lot of quality
Oh
setups,
yeah,
but
yeah.
I'm sure we'll discuss it. Is confirmation above 29, and then even if you run all the way to 30, you still have continuation above 30. I think the analysis is quite simple. And again, it starts with a high base scenario on the daily, dropping it down. You see the consistency of the 29 handle. Again, you got choppy wick action between 28.5 and 29. That gets on the daily chart, but that gets clean real quick above 29. You only have that one tick you're dealing with above 29, and I don't think you got to be concerned. So I think you can map this out quite a bit of different ways, whether you want confirmation above 29 or want to be aggressive above 29. For me, I think the analysis just does support confirmation above 29, especially in this market condition, right? You're dealing.
Oh, I think we lost Maddie.
Did we just lose him?
I think we just lost him.
Enhanced uncertainty than we have been dealing with in recent history.
Now we got him back. There was only 1 second little blip there, but I love that potential breakout. And it's good to go down to the intraday like you just did, Matt, looking at where those triggers are, and that 29 trigger on this one's good. And back on the daily, I did want to make one point. I want to add 1 point to this. And Frank, you started with that, the price response off earnings. Here's 2 in a row now where the development of their pattern was really as a post-price response off earnings. It took them both a couple weeks to get there, but that's why earnings reports are so significant in terms of developing trends and patterns. As you move weeks and weeks and weeks down the road, that's where those setups end up developing. Right?
Exactly. That's why you always hear me complaining about earnings a week after earnings season, but I kind of shut up about it 2 weeks after earnings season, right? Because I now have some things to work with.
That's
Extra
right.
note on this chart, I like it a lot. It also is closing above the weekly moving averages for the first time in a while.
Very nice.
And so you just don't have a lot of resistance for
Interesting.
several dollars if that breaks out.
It'll be one we discuss in the
For
meeting,
sure.
I'm sure. All right, maybe one more, Frank.
All right, one more.
One more.
It's always so tough when you say one more, right? One more is always tough. But I'm just going to go simple and nothing crazy here. I'm going to go PPG. Just another little breakout. This one with nothing but clear air above it. There's a few out there that are going to look like this, much like the financial sector as a whole. These guys, kind of do coatings and things like that. So they're more in the industrial specialties type of space, but just a consistent holding right up there at resistance after the big gap. So these guys not as pretty maybe, but the developing pattern after their earnings gap, right? They kind of had that drift, and now they're taking that time to really think about things. A little bit of a breakout, just a little bit of a square breakout here, right? Take out those highs, can use today's low as a stop loss, can use the low of the last couple of weeks as a stop loss, or anything below the breakout channel based off of rules. Nothing really above us. I would expect we take out that resistance. We have another fairly easy leg to the upside, and we've got a pretty good combination of coatings, chemicals, and industrial glass as far as theme going on with the stock as well.